Are you anything like me and own a couple businesses and just cannot seem to get finance for a home? Well, today it's time for a masterclass on mortgage lending. Get ready. Being self-employed is a different game.
Yeah. I don't have the guts to tell her that she's not approved.
Yeah.
3 weeks later, we were able to help her get a home equity loan, pay off all her debt, and give her enough money for the next 9 months or so.
I put my head down and I've driven so hard that I never really just sat back and was like, holy crap.
Hey mom, is there any way we can get a piece of pizza? And she says, son, we can't afford that. And I said, what if we get one piece and we share it between the four of us? And she looks at me and she has a tear coming out and she's like, we really can't afford this. And it was at that point that I still vividly remember it. And I'm like, if we're a family of four and we can't afford one piece of pizza, we're not doing well.
What's up, guys? Today, I've got a special guest with us, Will Gomez.
Thanks you so much for having me, man.
You bet, dude. You bet. So you guys know that we're all about helping entrepreneurs. So this guy, he's probably got an answer to my current issue that I had. So I felt this would be a perfect time to bring him on. So Will, tell us a little bit about yourself.
Man, so it's funny. You were telling me a little bit about your story whenever you got started and all that you got going on.
Yeah.
And you said you were about 30 years old when you left the corporate world.
I did.
So I'm 31 now. I started what I've been doing, which is mortgages, when I was 23. So definitely feeling like not the baby anymore. Everybody used to call me the baby.
Yeah.
Man, people ask me, how did you get into mortgages? And I feel that anybody that you ask, at least on a real estate agent, but most likely on the mortgage side of things, if they tell you that they grew up wanting to do this their whole life, they're probably lying to you, right?
Fair enough.
So I personally got into this by accident, but it became something very personal to me. I was actually born in Mexico. Most people think I'm Chinese, but I'm actually Mexican, and I was actually born in Mexico.
That shocked me. I'm not gonna lie.
Hey, dude, we'll go places, and people are like, what's your ethnicity? What are you? And I'm like, I'll give you 5 guesses. And people are like, Samoan, Hawaiian, they can never guess it. And I'm like, I'm Mexican. And they're like, there's no way. And I'm like, no, I'm serious. I was born in Mexico.
Hold on. Fluent Spanish?
Fluent Spanish, yeah.
No way.
Yeah. And so my mom had me when she was 17 years old.
Wow.
2 years after that, she had my little sister. And then 2 years after that, she had my little brother. So I'm the oldest of 3. And when I tell you that we grew up poor, people think of poverty here in the United States. Poverty in a different country, even a country just south of us, is a different ballgame. And as a kid, you don't really know what the status of your family is, how much money you guys have. And whenever I was, but it really, really hit me. I was about 5, about to turn 6. We were going through this, plaza that had a bunch of vendors, and I specifically remember this cart that was selling pizzas by the slice. And I tell my mom, hey mom, is there any way we can get a piece of pizza? And she says, son, we can't afford that. And I said, what if we get one piece and we share it between the four of us? And she looks at me and she has a tear coming out, and she's like, we really can't afford this. And it was at that point that I still vividly remember it. And I'm like, if we're a family of 4 and we can't afford one piece of pizza, we're not doing well.
Yeah.
And it was about 6 months or so afterwards that my mom comes up to me and tells me that she found a better opportunity, and that it would get us out of, the situation we were in. And it was because of that incident that I was like, sure. Where's this place? And she goes, well, it's not here. It's in the United States. And I go, when are we leaving? I didn't even know the United States was a different country. I'm about 6 years old at this time. And she goes, well, here's the thing is I only have enough money to take, myself. And so I need you to stay back with your brother and sister, with your aunt and uncle for just 6 months. I'll go over there, save some money, and I'll come back, and our situation, will be better,
Wow.
She leaves for 6 months, and then she calls me and she tells me that she feels that there's a way for us to come with her. And I was like, great. When? This time she didn't give us a time frame. And it wasn't until almost 3 years later that I got to see her for the first time, man.
Wow.
And once I got into, I said I got into this by accident. I was actually going to Bible college, and I took a part-time job at a local bank here, and I thought it was just something that was going to be seasonal, and I kind of worked my way up, and I specifically remember this one lady that I was helping her with the withdrawal, and I was like itching to sell her a credit card, and I tell her about this, credit card, and she was like, that would actually help me out a lot. So I'm taking her application, and she's telling me her story, and she's a single mom of 3 kids, just really struggling, and I click submit, and she gets declined. And I just my heart just went to my stomach. I'm like, I don't have the guts to tell her that she's not approved.
Yeah.
So I go and talk with my manager. First question he asks is, does she own a home? I said yes, because that was the first question. Do you own or do you rent? And then the second question he asked was, does she have any equity? And at this point I was like 21. I go,
what's that?
I was like, what's equity?
Yeah.
And then he's like, she just didn't even answer. He goes, talks with her. 3 weeks later, we were able to help her get a home equity loan, pay off all her debt, and give her enough money for the next 9 months or so. And all I could think about was what if my mom would have owned a home? Would I have been able to get those almost 3 years back with her? So after that moment, dude, all I kept thinking about was I want to help people buy houses. Yeah. So I share that story with you just because, I think the reason why I've been able to almost help 1,000 families in the last 7 years I've been doing this is because I knew my why from the get-go. And in this business, in any business, if you don't know why you're doing what you're doing, the chances of you failing are very, very high. So I'm super blessed, man. It's opened the doors to so many other things. And yeah, man, it's been an awesome ride.
So it sounds like you've found something you love, right? And you had some personal, things that's happened in your life that's led up into that point, mm-hmm. right? And you kind of had a turning point at that one situation. You're like, man, this is what I want to do. I want to help people, right? And when you can find that kind of internal drive, that's what it takes, right? You have to love what you're doing, or at least find a love,
yeah.
right? And to get up every day, right? And wake up, want to go to your work, want to go to your job, want to help people. It's those little things, right, that people don't really think about, that mm-hmm. I think drive people like you and I to continue to push every day, over and over and over. Kind of like we were talking about fitness, right? Mm-hmm. I found a love,
yeah.
And then as soon as I got my brain wrapped around it, and I was like, man, this is awesome, right? This is what I want to do. I know it's going to help me, and my health is going to be in check, and it's going to lead to other things, right? So it's a really cool story, and it's interesting because you caught me early on, and I was like, this guy's probably Asian, and
dude, I get that all the time.
Yeah, it was just kind of interesting. I was like, kind of threw me back, but I think he told me a little bit, right? And I want you to elaborate just a little bit more. So you've been in the mortgage for a long time, sounds like. So are you in a certain percentile in mortgage loan officers? Are you the best in Tulsa?
So it's funny you say that because when I got into business, I started in the bank that I ended up starting my career in. And I remember sitting down February 1st of 2018. And I thought I knew 10% of mortgages, and they set me down. And within the first day, I was like, I know 1%. It's super complex. And then, but what motivated me is that same week, I get an email. I was working with about 25 loan officers, and it was the volume that they were doing. And I saw if you're doing about $1 million a month, you're doing pretty good. So I went around asking everybody. I said, how long do you think it'll take me to do my first $1 million month? And the shortest time frame that I got was 13 months. So I set a goal for myself to do it in under 6 months, 6 months or under. So February 1st, didn't close anything. It was my first month. And then March, I closed my first deal. And then it comes April, under 90 days, I was able to hit $1.3 million for the 11 units. And I was just the way I tell people is that it's like whenever you're like at the river and then you see a cliff and you want to jump off it, but it takes a while getting up there, and then you get up there and you're like, man, it's a long jump. Like, I don't know if I really want to do this. Some people even like, they're like, forget this. Like, I'm going back down. I don't want to jump. But once you make that first jump, you're like, that was awesome. And then it's easier to get back up there, and you don't even think about it the second time. And so I was very, very lucky it took a lot of hard work, but I was very, very lucky to take that first jump right off the bat. 90 days go by, or within my first 90 days, because they sent it up per quarter. And I get this other new list outside of like the people that were in our office, or like our company. And it said top 100 loan officers in Tulsa. And I was like, I've never seen this. So I'm like going through it. And then I go through every single name, and I'm number 98. And I'm just like, I'm pumped, but then I'm pissed at the same time. I'm like, I cannot believe I made it on this list. And then I was just like, I barely made it on this. Like, and then so what I do is I pick up the phone and I call the top 10 guys, and I'm just like, hey, I'm new in the business. Would love to take you out to lunch, get to know your story. Yeah. Only 2 guys took me up on it. Wow. And then, really, it was like a podcast before a podcast. I was just asking them questions and trying to see, what I could learn from them. And then, so dude, the first year in business, I was able to land in the top 250 Hispanic loan officers in the entire country. And I've been in that list ever since then. Starting 2021 to today, I've been blessed to be in the top 1% of lenders of the entire nation. And that takes you, the first year I was on it, there was almost 500,000 loan officers in the entire nation. And so, along with other different things, I mean, it's been an awesome ride, man. And I've been super, super blessed, to also be driven by that as well, too. Cause once you get something, you don't want to let go of it. Right. So
I agree. So, I thought it was interesting that most of you guys that watch my show, he hit on something that I hit on all the time. So I'm going to say it again, right? Is you set yourself goals, right? Little wins. And that's what I always preach, right? Is that I began with the end in mind to some degree, right? But I also set myself incremental goals along the way, because in my opinion, people need little wins, right? You need a little bit of motivation for yourself. Anybody, everybody, you got to have a little motivation, a little wins. It doesn't have to be big. It doesn't have to be too far-fetched. Just set yourself incremental goals in whatever it is that you're in, whether you're a mortgage loan officer or an entrepreneur that's starting a new business or what have you, is setting those incremental goals, driving as hard as you can and hitting those goals, take a step back to breathe. And that's where I think I did. It literally took, I think, this is interesting. I shared it probably 3 or 4 podcasts ago, but I put my head down and I've driven so hard that I never really just sat back and was like, holy crap, right? The other day, and it's such a weird situation, but I'm literally crossing the 2 buildings, and I just kind of stopped for the first time, really. And I just sat around and I was like, 5 years ago or 6 years ago or however long it was, I was like, I was just taking a chance, took the leap, right in the middle of having a baby, went into, sold myself on something I'd never done before, right? In a room full of people that believed everything that I had to say. And here I am, right? And all it takes is just one, believing in yourself and just taking that leap.
Yeah.
Right? So, that's perfectly aligned to where I want to kind of shift this thing. And I've had some personal issues, and I said at the very beginning, as an entrepreneur, you get into this and all I'm thinking about is everything in my world, right? And then here we go. I'm doing okay for myself. I'm getting better. And then next thing you know, my wife and I are like, I have 3 kids, by the way, right? And she's like, let's get another house. And I'm like, yeah, it's time, right? We've lived in the same one for 10 plus years, right? And like I told you, I've just been pulling my arrow back. I have very, very, very little debt. And, that's just kind of, I've always lived that mindset where I don't overspend on anything. We're very frugal, and we wanted to make that leap, right? And then the first go round, I really didn't know what I was doing. The first time when I got my very first house, I was a W-2 employee. It was a little bit easier. Okay. It was debt to income ratio, right? And I was doing pretty good. Like I said, I had low debt anyways. So the house was $79 a square foot when my first house 10 years ago. That's unheard of these days too. So it was fairly easy, I would say, as a W-2 employee. My wife was working, I was working, combined income. Wasn't terribly difficult. Well, I ran into some challenges when I was self-employed, right? And I want you to kind of delve in because I'm no expert, right? And that's why I think it'll really help people that are listening. If you're an entrepreneur and with your experience in mortgages, being self-employed is a different game.
Yeah.
Right? You have to prove, and you have different documentation to prove to the banks. And to be honest with you, the first go around I failed. They wouldn't approve me, and I was making plenty of money.
Yeah.
Right? And they would not approve me. So help me.
Yeah.
And help the people who are watching, these young aspiring entrepreneurs or people who already have businesses that may have run into the same challenges that I have. Help us understand where to begin, right? And how would you situate yourself, right, to better help your chances of getting a mortgage loan when you're an entrepreneur? Because it is difficult. Even somebody like me that, I was making plenty of money and I still couldn't quite prove it. Right? So what do you think?
So I want to start off by saying that whether you're self-employed or not, if you look up, and I challenge you after this podcast, I challenge whoever's listening after you're done listening to this episode to Google what are the top stressful things to go through in life. And no matter which link you click on, but the very first thing that you're going to see, number 1 is the death of a loved one. Number 2 is going through divorce. And number 3 is buying a home.
Wow.
Whether you're self-employed or not. And that being said, most people don't know, but it takes 35 to 40 people to close one single deal, including the buyer and the seller on that end.
Wow.
The main people that you see are going to be first, your real estate agent, and then second, see or talk to the most is your lender, right? Those people too are the most highly compensated people in the entire transaction. So they really, really have to know what they're doing. They're like the doctor. If you're getting surgery, you know that you have to, go, call somebody, schedule, you go in, they check you in, they say, hey, fill this out. And you have to go through so many people before you get to the actual doctor that's just going to operate on you, right?
Yep.
What I'm very happy is that doctors have to go through like 10 years of schooling and have to go through residency and all that stuff to where even if you have a new doctor, you're like,
might be all right.
Yeah, it might be all right. Well, on the real estate side, as a real estate agent and as a mortgage loan officer, it is much, much easier to become that than a doctor, right? So what I like to tell people is that not every loan officer and not every realtor are created equal, right? So with that being said, it's very, very important who you're working with, right? I always tell people, like when I first meet them, like, hey, who referred you? What did they say about me? Because depending on what they said about me, I also like to give a quick little 30-second, commercial on me, just so they know what type of loan officer they're dealing with. Like I tell them, hey, we get, 50 to 70 people referred to us every single month from like local people that have worked with us or real estate agents that trust us with their buyers. We've been able to help almost 1,000 people in the last 7+ years, where the average loan officer in today's market, they're closing maybe 10 to 15 loans a year. So if you have the experience of seeing the deals over and over and over again and keeping up with guidelines, because guidelines are constantly changing all the time, right? So when it comes to self-employed people, you have to work with the right person that really knows their guidelines. I'll give you an example. One guy, I've helped him a couple of years ago, but pretty much I was his fourth lender that he talked to. He already had a house, but he was just looking at refinancing. That was, rates were a little bit lower. And, he's like, man, I don't understand. Like, he was a, anesthesiologist, and he was working, W-2 for a, hospital. And then he ended up going self-employed and worked for multiple hospitals at the time. And, every bank told him, you need 2 years of tax returns. He had just, he had 1 year under his belt. And then I was like, you know what? Let me take a look into this, try to figure out. I went to my underwriter, double looked at the guidelines and everything, and found out that if you've been on the same field for, so he was doing the same thing. If you've been in the same field for at least 2 years before, and the new field that you're self-employed and you're making the same or more, we only need 1 year of tax returns. That was a $500,000 loan that I was able to get for myself, and also help him save hundreds of thousands of dollars in interest, just because I knew my stuff, and I was willing to be able to dive deep and try to get creative. You have to find something that's creative. Now, with that being said, with being self-employed, there's pros and cons. Being W-2'd, let's say you were making $100,000 a year, you had no option but to have your taxes withheld, even if it was, whether it was married, or some people file single, even if they're married, just so they can withhold a lot more, so they can have enough taxes and they don't have to pay them at the end of the year. But you don't have an option. You can't say, like, if you get paid $120,000 a year salary, you can't say, hey, don't take any of my taxes. I want to see my full paycheck. Like, you don't have that option. Yeah. So if you come to me and you're W-2 and you say I make $120,000 a year, it's most likely, it's when you give me your documentation, is going to be pretty believable that you're paying taxes for $120,000 a year. Fair enough. So when you're self-employed, the pro on that is that if you make $120,000 a year, you can say, well, I did eat out a lot this past month, but technically had to do with business. I did go to Florida this last month, but I did take a look at some, porta potties that, and your tax guy's like, yeah, give me all you got. Like, we'll write all this stuff off. To where you might have made $120,000, but on actual profit or paying taxes, you're only paying taxes on 10,000 of it. Right. Mm-hmm. Yep. So then it's really, really good for the tax purpose of it. But whenever you're trying to get lending, and depends on what type of lending, because if you're trying to get a credit card, it's much different than if you're trying to get a car loan, and it's much different if you're trying to get a mortgage, right? So if you're an entrepreneur and you're thinking about getting a mortgage, I would highly recommend speak to a mortgage lender, even if you're not even thinking about buying in the next 2 months, 3 months, because that's what happens. Is most people don't think about any of this until they're like, let's go see open houses this weekend. You go see an open house, you love the house, you want it, and you want it now, right? Mm-hmm. So what I tell people all the time is, if you're self-employed, talk to somebody with experience, and talk with somebody that is going to coach you through it. Because from January and February, what I normally do is I'm calling about, that list keeps going up, but this year it was about 35 to 40 self-employed people that either I've helped in the past, or they were sent to us before and they weren't qualified. And I just call and I say, hey, before you file your taxes, whether you want to buy this year or not, have your accountant or CPA send me a draft so I can take a look at this draft and I can tell you what income I would be able to give you, just in case you want to buy a house, or even if you want to buy a house next year, because most of the time we need 2 years of tax returns, but there's other different loopholes on that as well too. If you've been self-employed for 5 years, then we're able to only use one tax return, and most loan officers don't even know that. So it is a lot more challenging, but if you're working with the right people, it can make it a lot less stressful. If that answers your question.
It does. And let me give you a little more insight of some of kind of what's happened to me. Okay. And then maybe you can kind of coach me a little bit. And the interesting thing is, and I was telling Alex here, is that I'm supposed to be closing on my home loan. My wife and I built us a brand new house, right? I was going to do a construction loan and I couldn't do it. Okay. So I found a builder.
Really?
Yeah.
Construction loans are normally easier to get than an actual mortgage.
Yeah. And I'm going to delve into that for you a little bit. So interestingly enough, I am in the next 90 days gonna need to get a loan, a conventional loan of some sort, or maybe there's other types that we could look at too. So I've been working with a guy out of Owasso. His name is Russ Peranti. I don't know if you know him or not. He's a broker, but long story short, here's how it started. Is when I first got going, and for quite some time, I paid myself on a distribution, right? A guaranteed distribution, right? K1, right? And a little time goes by. I tried to get my first construction loan a couple years into it, got denied. Okay. I don't remember, it's been a little while, so I don't remember all the specifics. And then I did another 2 to 3 years getting paid the same way. And then we essentially had to, for tax purposes, shut down some of the businesses we had. We rolled everything up into a holding company. So the holding company owned the subsidiary. But because of that weird tax event, it restarted, and this is what they're telling me at least. It restarted my clock, if you will. Okay. And then it screwed me again. Right. So this time, I'm kind of in another weird situation to where I got tired of getting denied, and I changed my pay over to W-2. Okay. And did that. And then we switched payroll providers in the middle of the year last year, where I was paying my W-2, paying my taxes. Okay. When we switched payroll providers, unbeknownst to me, and stupid me, I wasn't even watching my paycheck, right? Is they stopped taking taxes out of my W-2 income.
Really?
Yeah. So I'm not going to go into that too much, but so the end of the year comes, February, March of 2025, and I'm like, I need my W-2, and they give me a W-2, and there's no income showing on my top line. And I call them back, and I was like, there's got to be a mistake here. This is how I was getting paid before. I don't know how this got screwed up. I should have caught it. I didn't. And long story short is they gave me they fixed it, but they gave me a W-2G. So it's basically a where they go back and
like an amendment. Yeah, like an amendment. Yeah.
So that's where I'm at right now. Is it got jacked up.
Yeah.
And now I have a W-2G, right? So I'm a little nervous, to be honest with you. But the reality is I have to figure it out because I've hired a builder to build this home.
Yeah.
And I'm 90 days out, pretty much. I did talk to my broker, and he said, yeah, we should be able to work with it. We'll see. So...
Dot.
That's
we have 10 commandments in my team, and you never
it.
No.
Oh no.
No.
Oh no.
No.
Well, I'm about to call you. So
there's a lot going on there, right?
Yeah.
But for the sake of people listening and being an entrepreneur, I think that we can dive into some of the things that you said. So a couple of things you said. We had a business, we had a holding company, restarted the clock there. That is true, because essentially you went from owning this business to saying, like, I don't own it anymore. I own, ABC, LLC, now, and ABC LLC owns this other business now. So therefore it's like, well, ABC LLC has only been in business for 3 months or whatever. So depending on how strong the profile is, right? And depending on who you're working with, because what I tell people all the time is, if you're trying to get a conventional, an FHA, a VA, like your traditional loans, no matter who you work with, they're all working with the same investors, right? So those investors have rules. They're guidelines. We all have to follow them, right? But different banks have what's called overlays. What an overlay is, it's a rule on top of a rule, right? So I'll give you an example, just a basic example. So FHA loan, whenever I was working at the bank that I initially started at, the minimum credit score for that was 620. No matter what, 619, you can't get approved, 620. And then if you actually look up at the actual FHA handbook, the handbook says you can actually go down to 580 with a minimum down of 3.5%, or you could go down to as low as 500 if you have at least 10%. The bank that I was working at, it didn't matter if you had 50% down and you were at 619, they would not approve you because they didn't want to take that added risk on that. So the company I work with has little to no overlays at all. So what I'm able to do in a situation like that is essentially I'm a mortgage loan advisor, but sometimes, dude, I feel like I'm an attorney and I'm at court arguing with these underwriters because it's my job to convince them. That's who I have to convince, is the underwriter, of how this makes sense. And also, how are we going to be able to sell this on the back end to the investor, Jenny, Freddie, whoever that is. So for me, it's like, how can we not document that this person owned this business for 5 years, let's say? We can document it that now this business owns it, but the same person owns that business. Like, and depending on who I get, depending how strong the profile is, sometimes you can get away with something like that, right? That's one thing that I wanted to point out. The second thing is, whether it's K1 distribution or whether it's a W-2, you own more than 25% of the business, right?
Less
than that.
Yep.
Okay. Because what I was going to say there is what a lot of self-employed people like to do is whenever they go to a corporation, they like to say, I make $100,000 a year on W-2. Well, if you own 25% or more of the company, it does not matter, because we take the W-2, we take the K-1 distribution, and we take all the tax returns of the entire corporation and mix it all together, because it doesn't make, like, you as the owner of the company, you could just say, hey guys, or if most people own 50% or more, so they're just like, yeah, let's go ahead and I pay myself $100,000 or $200,000 or whatever. And so we have to see the whole thing. So it doesn't, most of the time when people feel really confident because they're W-2'd, but they own 25% or more of the company, then most of the time we still have a debt to income issue because we see where they took it out from, and all that stuff. But if you don't own 25%, then honestly,
I'm just under that.
You should be good. Now, here's the question: with all the stuff that you have going on, we have to kind of take at what all the income that they're taking in, because in most cases you have to have had the income that you're trying to use for anywhere from 12 to 24 months, depending on the risk of the file as well too. What I mean by that is that somebody like you're like, well, I get this W-2, but then you have other types of income that we're like, can we not use this? Can we not use this? And it's like, we got to make sense of what income you actually need in order to be able to make it work. Because a lot of the times people like yourself that have other streams of income, we can only source like one, or they only have enough income in one business. Because they're, even myself, like I've been super blessed that I have, a few other businesses that I've invested in, but on paper, they're not showing an income, but I don't need that income because my main job is all the income that I need for anything that I want to do, if that makes sense.
Yeah.
So, does that answer your question?
Yeah, it does. And that's kind of interesting. So that's my situation. And it sounds like I could potentially have a couple options here. Yeah. So I wanted to dive into something else. So I bought my first home, like I was telling you, probably 10 years ago or so. And what are my options on down payments and types of loans I could potentially be approved for? Because I think that's something that not a lot of people understand.
Yeah.
Right? I mean, my first one was a conventional loan. I put 25%. I didn't have to, but I think I put 25% down, something like that. I had the money to do so. Not everybody has that option, right?
Yeah.
So in this particular situation, I'm going to be selling a home to use some of the money for the down payment on the next one, right? I can't remember what they call that, but long story short,
like a bridge loan, is that what you mean, or
no? It's a real estate term where I have to. I'm selling my home, and once the home gets sold, I pay my down payment. I'm starting early, but I'm using my money for the home, the equity I have in my home now when I sell it for part of my down payment.
Gotcha.
So, but I don't want to dive into that. But what other options do people have as far as loans go? And then specifically in my situation, you know a little bit about me. What options do you think I have?
Yeah. So what I normally tell people that are very, very green, normally whenever I talk to somebody and they're first sent over to me, especially if they're a first time home buyer, the first question they have is, what's the rate?
Yeah.
Right? That's the first question that they have. And the reason why that's the first question that they have is because that's all they know.
Yeah.
Right? Like if you go get an oil change and you don't know anything about cars, you're going to say, how much does it cost? Because that's all I know. It's like, how much am I going to pay? I'm not going to ask like, what type of oils do you guys have? Or like, any other questions that I need to ask because I don't know anything about that. Right. So what I tell people is, that are brand new, first thing that I want them to understand is there's essentially 3 pillars when it comes to mortgage lending, right? The first pillar is going to be percentiles of a down payment, right? Most people are putting anywhere between 0 to 3 to 5% down. There's a smaller percentage of people, but then still people that are selling and buying a home or saved up for a down payment are putting 5 to 10% down, and a much smaller percentage of people are putting 20 to 25% or more on that there. What I do tell people all the time from the get-go is it's not as taboo as it once was to buy a home with less than 20% down, unless you're a big Dave Ramsey fan and you're listening to him all the time. He will tell you, do not buy a house unless you're putting 20% down. But back in the 90s and so, lending was a little bit different to where if you wanted to buy a house, you had to have a bigger down payment there. The second one's going to be credit. You need about, depending on who you're working with, but if you're working with a bank that doesn't really have a lot of overlays, you can probably get a home loan with about a 600 credit score average. The average credit score is about 680, and then if you have a 740 plus, that's considered top tier. And then the last one is debt to income ratio, which we kind of, dove into it a little bit there. Debt to income, the best way I can explain it is, if you're making $10,000 gross a month, for majority of the programs that we have, we can only go up to 50%, which that means that you would have $5,000 that we can that can go towards any of the monthly payments that you have that are on your credit report. So student loans, credit cards, auto loans, and the new mortgage that you're going to have there. Right? I normally tell people just your mortgage alone, no matter how much income you're making. If you're using 35% of your income for mortgage, your mortgage payment, your housing payment, you're being pretty aggressive. If you're about 25 to 30, you're pretty average, and if you're 20 and under, you're being very, very conservative on that end. So to answer your question, there's a lot of myths out there, like FHA. It's only for first-time home buyers. That's not true. It's not true. You can only have one FHA loan at a time. That is true. But for somebody like you, which I can already tell you, FHA wouldn't be, a loan for you. But let's say that you were just buying, a different house. Your situation was different. You could go into another FHA loan and put a minimum of 3.5% down. Now, where you're at, you said you might potentially be looking at a conventional loan. The minimum that you would have to put would be 5% down. And if you're a first-time home buyer on conventional, the minimum is 3% down.
I did not know that.
Yes. And the last thing that I will say on that too, because you said, when I bought my first home, I put 25% down, I could do that and stuff. What I tell people is that, the reason also I love real estate so much is because, people ask me, are stocks better or is real estate better? And I say real estate. And they say, of course you'll say that because you're a mortgage guy. I'm like, well, let me explain this to you. If you have $10,000 and you put $10,000 and you buy, Google stock, or you buy a $200,000 home and put that money as a down payment, closing costs, all that jazz there, right? And let's say that the Google stock goes up 3% for the year. Well, you're only going to get paid 3% on the $10,000 that you initially invested. Mm-hmm. A mortgage, real estate is leverage, because if the house goes up 3%, you get to make 3% on the $200,000 that you initially invested. Mm-hmm. So what I tell people though is that the more that you put down, it doesn't change the appreciation of the home, but it does change the percentage of the ROI on it. So the more you're putting down, the less your ROI is, because you put a lot more skin in the game, if that makes sense. So I always tell people, my biggest thing is, what is your comfortable monthly payment? And if I show you, if you're, because I've had people like you, when you bought your first house, that they're very adamant that they want to put 25% down. And then I say, okay, what is your like where do you want your payment? And they give me a payment. I'm like, well, hey, if we put 10% down, and buy the rate down a little bit, we can have that payment and you get to keep the other money.
Yeah.
And that gives that person better return on investment. And this sounds very, very silly, but I always have to remind people, if something happens, because most people, when they have a big down payment, they put all the money that they have into the house, which is, it's really crazy to hear, but that's what people do. And I say, if something happens, you can't grab money from the walls. And the only way you can access it is if you sell the home or if you get a second mortgage, which sometimes people can't get approved for it, et cetera. So I'm a big believer on if being comfortable with your monthly payment, and with that on that same page, not putting all your money into the house there. So yeah, but somebody like you, even, with all that you have going on, you could get into a house with 5% down, which is like, it's very rare for the rest of the world. Like, we're one of the very few countries that do that.
Wow. Well, guys, I think he's give us about a master class on mortgage loans. So you're welcome. Get ready for the second part, because we're getting into what he just started talking about, which, like as I told you earlier, it's not, I'm not a super expert. My partner Josh, who's not here today, he's out playing. So I'm here having some fun and working. But we're going to get into real estate. So check out next week. You're not going to want to miss it. That's for sure.